So the only part of this I did was adding it up, addition. And that's where you get to this claim that the budget package, including tariffs as a whole, will hurt 80% of Americans and help the richest 1/10.
The deficit estimates are, I think the CBO said 2.75 trillion in addition to the deficit. Other nonpartisan agencies have said it's closer to 4 trillion. At what point, our debt to GDP isn't as great as Japan or the UK, but it's greater than most G7 countries. At what point do you think the deficits begin to matter? Because so far, I think you'd argue they haven't really. And the bond market is making some noises that they're worried about this, but I wouldn't describe it as, there have been spikes that have been pretty dramatic, but is this, in your mind, distinct to the morality here? Just talking straight about the credit markets and when the deficits aren't a problem until they become a problem. Do you think this is the tipping point where our deficits might take our economy into sort of a very difficult downward spiral that's hard to snap out of?
So first of all, I just want to get the facts out there. The facts are that this budget has about 4 trillion in tax cuts and about 1 trillion in spending cuts. And so the rest is simple arithmetic. That then says that that's going to cost the budget about $3 trillion.
And some of these spending cuts may never actually happen, right?
Yes, and it's worse than that again, which is a lot of the tax cuts. There's this gimmick that's worth, I'm going to talk about everything to the nearest trillion. This is how crazy it is. There's a gimmick, which is a lot of the tax cuts till the end of the Trump administration. And then the way they score it is the law says, and then they go away. But we know exactly what happens in 4 years' time, which is they're going to say, well, we can't have a tax hike, therefore they're going to have to come back. And so there's another trillion or so in gimmicks right there. That's just an accounting gimmick. The Republican answer to this has been, yes, but the tax cuts will spur so much growth that, in fact, they pay for themselves. This is a lie on its face. If you go to center-right independent scorers like the Tax Foundation, so no friend of Democrats, if you go to the Congressional Budget Office, if you go to the Penn-Wharton budget model, also run by a former Bush appointee, they say maybe you'll get a quarter or a half a trillion back from increased economic growth. For your audience, we've seen this movie before. It just doesn't work. Reagan told this story, Bush told this story, Trump told the story in the first term. Here's this weird fact. If you cut taxes, you cut tax revenues. Simple as that. There are offsets. They're relatively small. Anyone who tells you they pay for themselves is lying to you and almost certainly lying to themselves. There's not a credible economist on planet Earth who believes these tax cuts pay for themselves. So if you run a deficit this big, what are the problems? I think the first problem is what happens if there's a new COVID, a new financial crisis, an oil price shock, a war, something that causes the economy to go south, as it does, with a 1 in 7 chance every year. There's less of what economists call fiscal headroom, which is to say it's harder to go out there and spend a bunch of money if your deficit is already really, really big. You might find it hard to raise the money. You might not think it's prudent. And so what that means is our ability to counter the next economic shock is substantially diminished. That's not as drastic as you were describing, Scott, but to me, it's a really freaking big deal. So then you're asking what happens to the debt. Of course, deficits accumulate and add to our national debt. The more money you borrow, the higher your interest payments. If you spend all your money on your house, on your mortgage repayments, there's less money to send your kid to college, to go out, to have fun. Same thing applies to governments. It's a little worse than that. The more you go into debt, the more others worry that you can't repay your debt, and therefore they jack up interest rates. That also happens when you get a second mortgage on your house. A reasonable estimate from the Congressional Budget Office is every time we raise the debt to GDP ratio by 1 percentage point, interest rates go up by 1/50th of a percentage point. It doesn't sound so bad. But on some of the current projections, we could be within a couple of decades raising the debt to GDP ratio by 25 to 50 percentage points, which would raise the interest rate we pay on our debt by half to 1%. Now, the thing is, when you owe a lot of money and your interest rate goes up by 1 percentage point, your mortgage payment goes up a lot. Folks at home will know that from thinking about their mortgage payments. Well, when you owe $30 trillion and your mortgage payment goes up by 1 percentage point, that adds to your spending by about $300 billion a year. Now, billions and trillions are really hard to keep track of, so let me come back and put it in a different perspective. The president is claiming that one of the most important things he's doing is raising revenue through tariffs. If he's successful, he'll raise about $300 billion a year in tariffs. That's exactly how much the interest rate would go up if the interest rate we're charged on government debt were to rise by 1 percentage point. So it's a big chunk of change. The more cataclysmic thing, and I know this has been a long answer, that you've been worried about there, Scott, is things in a country like Japan are okay, which is Japan keeps being able to repay its debt, therefore it's seen as safe, therefore everyone charges at a low interest rate, therefore it can repay its debt. That's what we call the good equilibrium. There's an unhappy equilibrium that exists out there as well, in which folks worry you can't repay your debt, so therefore they jack up your interest rate. Once they jack up your interest rate, now you can't repay your debt, and that becomes a self-fulfilling prophecy. If you think that sounds like a fantasy, ask Greece about this. Ask Argentina about this. This happens. And so that's the cataclysmic possibility. I'm not sort of super worried about that right now, but this is, I think, the really important reason to always be a little bit worried about what's going on with your debt. Taking on student loan debt to go to college can be a good idea or a bad idea. In the same way national debt can be a good idea or a bad idea. If you take on $40,000 worth of debt and turn up to the University of Michigan and never go to class and drink beer and go to football games, you've set yourself up to be repaying your student debt every week for the rest of your life. And it's going to be a somewhat miserable life because you'll also learn nothing at college and you're not going to be earning those high wages that my students go on to earn. That's a terrible reason for going into debt. If you go into debt to come to the University of Michigan, take my class, take a lot of other classes, launch your career, and you're launching a career, economics graduates on average earn more than $1 million more over the course of their lifetime than non-graduates, then that was a wonderful investment. You'll find it very easy to repay those debts. And so when you're thinking about government debt, the question is this more like spending on beer and Skittles, or is this more like investing in your education? So spending on a military parade, beer and Skittles. Spending on early childhood education, it turns out that yields such enormous returns, it actually yields more in future taxes than it costs to do. So really, as much as we economists want to confuse people, I think the most powerful thing is to think about it line by line. Is this useful and worth repaying, or is this a waste of money?
When I think about sane fiscal policy, at some point, there needs to be an adult in the room. And say there was, and one of the things that's really disappointed me about the Democratic Party is I think they should come up with their own counterproposal to this tax bill. But nobody wants to have an adult conversation. And assuming that part of that adult conversation is that we need to raise revenues, which is Latin for raise taxes. Ideally, you want to tax it as the least taxing possible, right? I think if you were to tax, all of a sudden come up with taxes on people making less than $50,000 a year, that would probably be pretty taxing on society. In your viewpoint, if you were advising the White House and said, okay, we've got to raise at least $1 trillion in additional revenue right now, what taxation scheme or taxation policies do you think would be the least taxing on the economy and its citizenry?
So raising taxes is good because it raises revenue, and it's bad because it creates disincentives, right? If you want less of something, you tax it. When we tax income, we're taxing work, and so people are going to do less of it. And so then the question, when you're saying what's the least taxing, is who really needs or who would benefit from sharper incentives to work and who wouldn't pull back a lot. So the logic of the anti-Robin Hood is there's an elite 10% out there, and if only we would reduce their taxes, that would unleash all sorts of creativity and they'd finally start working again. Those Silicon Valley entrepreneurs who don't work very hard, they'd suddenly work twice as hard because they get to keep an extra 10%.